Okay, it's a day in the red. We are at the day's low. Good afternoon and welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Across the board, any index you pick up, any sector that you talk about, it is in the red right now. Midcaps have taken a bigger beating. IT, for some reason, actually is bucking the trend today. It did slip into the red but has recovered and it's been very volatile. But for now, it is at the day's low.
Absolutely right. Day of pain as far as the entire market is concerned. IT, a couple of brokerage notes, upgrading the forecast as far as some of the ratings are concerned, especially with IT stocks that have exposure to the US BFSI space. India VIX is very, very strong, and that's another reason why you're seeing the kind of volatility that you're seeing. There's a brief attempt at recovery, but that too has seemed to be sold off into quite a lot lined up on the show. Let's start off with the top headlines. The Bank Nifty slips below 51,000 and the Nifty slips below 25,000. And the mid-cap index loses near 1,300 points as volatility grips Tree Street. PSU banks, metals along with oil and gas are the big drags, even as IT remains relatively resilient.
LTI Mindtree and Emphasis gain as JP Morgan upgrades both stocks to an overweight rating. The brokerage sets a target price of 6,900 rupees for LTI Mindtree, while that of Emphasis at 3,400 rupees a share.
Natco Pharma gains in trade as Mylan and Novo Nordisk reach a settlement over the Ozempic generic in the United States. Remember, Mylan and Natco have partnered on the development of generic Ozempic products.
Gujarat Pipavav ports under pressure after reporting its Q2 FY25 operational update. Containers handled down 17.1%, while dry bulk volumes slipped 56%.
Federal Bank and L&T Finance correct after posting weak Q2 FY25 business updates. Federal Bank's CASA ratio declined sequentially, while advances gained 19.3% on a year-on-year basis. L&T Finance sees its rural business finance disbursals slip 5.4% on a year-on-year basis.
Okay, below the 24,800 mark on the Nifty, that's what we are looking at right now. Mid-caps down 2.2%. We are at the day's low, and we've been making lower lows since morning after that brief recovery that we saw, and the Nifty was in the green as well. Mid-caps are down 2.2%. If we talk about the sectoral movers, the CPS index is seeing a big cut, 3.6% lower on that one. A lot of these stocks which have surged one way are seeing some profit booking now. Nifty Media, be it PSU banking index, the small cap index is down 3%. The advanced decline ratio is at 1:10 in favor of the decline. So that's the kind of fall that we've been seeing across the board, and that seems to be the case because last two trading sessions were bad and today as well, bad for the bulls of course, and this despite the fact that global markets, we've been getting strong handover from there.
Well, you pointed out correctly, the advanced decline ratio is so weak, almost 1:10, and that indicates the kind of pain. Just to give some context, we've actually seen the sell-off intensify in the last 8 trading sessions. So if you just pull out the data, if you look at the mid-cap index, 3,500 points, almost 6% lower in just the last 8 trading sessions. That shows the speed or the velocity of which you've seen the fall. Again, the small cap index, again over here, 6% in the last 8 sessions. The Nifty or the NSE 500 index, a broader gauge, that too is down almost 4.5% just in the last 8 trading sessions. But quite a lot of stocks is what Hormaz has on his list. He's standing by the wall. Hormaz, day of red today.
It's a yawning gap, right, between the advance and the declines. As you see that chart being pulled up, and you would see that yawning gap between the stocks that are in the red and the stocks that are in the green. A lot of and a considerable pain being felt within the mid caps and the small cap space as well, not to forget the benchmark indices. But we'll start off with the losers then within the broader markets, and Ola Electric is a stock that you cannot not talk about. Now extending its losses, 9% lower now is Ola Electric onto 90 rupees. Blue Star Bombay Burma is not having a very good day, as is Jubilant Ingravia, now 8% lower for the stock there. Vodafone Idea too among the top losers within the broader markets. PSUs in general are seeing immense selling pressure, and railway stocks are not far behind. All of these stocks have corrected anywhere between 30 to 40% from their peaks in the month of July. So considerable selling pressure coming in within the PSUs as well. Some other stocks PSU banks that are under pressure as well. All of these, all constituents within the PSU bank index also seeing losses of anywhere between 4 to 5%. Stocks that are doing well and not so well on the back of strong volumes, and Avenue Supermarts was down on Friday, down today as well. Some stocks bucking the trend. Finolex and JK Lakshmi seeing some gains today on the back of strong volumes as well. And lastly, plenty of business updates that came in over Friday and today. AU Small Finance Bank having a positive reaction to that, and Federal Bank having a not so positive reaction to that at the lowest point of the day, down 5%. Back to you guys.
Okay, a long list of losers today. Thank you so much for joining in as always, Hormaz, and telling us what stocks are moving in the broader markets. Let's do one thing. We'll slip into a short break now. Rajesh Bhatia from Uflex will join in to discuss the new capex that the company has planned in aseptic packaging facility in Egypt and a lot more. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Uflex is the stock on our radar. Company's arm Flex Asepto has decided to set up an aseptic packaging facility at Egypt with an investment of approximately $126 million. Do note the company has around 463 million rupees of the capex upcoming in FY25. To discuss this and more, we have Rajesh Bhatia, the Group President CFO at the company, joining in now. Mr. Bhatia, good afternoon. Thank you so much for joining in. Just some more details on this capex that you've announced. By when do you plan to commercialize it? What is the asset turn expected here? How will you be funding this capex?
So we are looking at commissioning this by third quarter of FY26, and we're going to spend about $126 odd million, mix of debt and equity. Largely debt, I can say about 1/3 equity and 2/3 of debt. And, like our aseptic packaging business here in India, which we are expanding to 12 billion packs a year, this facility would be 12 billion packs a year. And gradually, I think we are looking to ramp up the capacity utilization at this plant to about to the full capacity. But, these are new territories for us. Obviously, when we started in India as well, it took time for us to penetrate. So these are the markets which we are looking at currently, the local market in Egypt and the European market. And given that Egypt has an advantage to export to Europe in terms of the duty. So there is no duty when you export from Egypt into Europe. And obviously, the big market here is the Europe, which we are eyeing. And it's a natural, sort of expansion of our existing aseptic packaging business from India to take it to global, as we had done earlier with our packaging films business many years ago.
Mr. Bhatia, you've given us the rationale. You've indicated that, this particular plant at Egypt will look to go ahead and cater to the European market. In terms of broad numbers, what is it that you could share in terms of the opportunity size that you see as far as the European market is concerned? You said that you're expecting it in the second half of FY26. So when can this particular facility start kicking into your own financials? And what would be the kind of opportunity that you're looking at?
I think we will, a 12 billion packs overall, you will look at about $150 million odd top line, and EBITDA margins, difficult to say at this point in time, but we expect about better EBITDA margin than what we have in the packaging films business. And obviously, this is one business which we are now planning to take global, given our success here. From India also, as we speak today, there's 70% what is sold in India from our Indian plant, and about 30% is what is exported, which is today to Southeast Asia, as well as to a little bit to Nigeria, and then to Middle East. But this particular facility will largely look to supply to Europe and Egyptian, slightly African markets as well. So I think we have to keep a longer time frame as to when we reach our 12 billion capacity on this, and we'll be progressively keep on informing about the capacity utilization of this plant. But I think this will take some time. Like if I were to say in India, how did we go from 3.5 billion packs to about 12 billion packs, which we're going to commission by the end of this year? So it's a 6-year kind of a journey. So hopefully we can replicate this in that plant as well.
All right. Mr. Bhatia, if you can also talk to us about your PET chip plan. It was to be commercialized in Q3 FY25. Is that on track? Will that start contributing to revenues in FY25 itself? And in that case, what kind of volume growth, realization growth are you expecting in FY25 with the margin number as well?
So this number for the PET chips, I think we are largely thinking of utilizing it for our internal consumption in Egypt, in Europe, in Poland plant, in Nigeria, and in Dubai plant, and if required in our Mexican facility. So this facility is largely captive, and so initially, when we look to substitute our outsourced raw material for our BOPET films plant with this, I think we're looking to only the margin expansion with this business, which may be anywhere between 1.5 to 2% range for in the packaging.
Mr. Bhatia, give us a sense directionally how Q2 panned out. Number one, demand. How did raw material prices pan out over there, and how are the spreads as far as the BOPT as well as the BOPP when you're comparing it on a sequential basis?
So I think definitely much better than what we had in Q2 of the last year. And clearly the Q1 set the pace for that. We already, the numbers for Q1 are already announced. And Q2, as I had said earlier as well, that, if we look at the Q1, the substantial quantum of the price increase came into being after the first fortnight of June, which means that it will have a full impact of this quarter will have a full impact. Having said that, thereafter the BOPET prices went down a bit. They came up again. So there has been a bit of, sort of up and down kind of a momentum, but the PET prices are quite reasonably stable. So the margins are definitely going to be better than what we had in the Q2 of last year, as well as in Q1 of the current year.
Okay, yes, and the stock price also shows that these stocks have recovered, the packaging film space and yours as well. Thank you so much, Mr. Bhatia, for joining in and giving us all those details. So looking very positive on the new capex that the company has announced. By the way, the markets have slipped further. It's a 300-point cut that we're looking at on the Nifty, very close to that 24,700 mark. At the day's low, the mid-cap index also is down further. It's a 2.3% cut. When we started the show, we were down around 2.1. So watch out for that one. There's a continuous slide from the top as well. But as we slip into a break, here is some good news for you, our viewers. India's business news leader is now click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store.
Welcome back to Midcap Radar. Well, now on to the big CNBC-TV18 exclusive. In a rare interview, BK Goenka, the chairman of Welspun World, tells Nigel that he expects Welspun's B2C India revenue to grow 6 times in the next 5 years. He adds that India is set to play a bigger role in global home textiles market. Let's listen in to a few experts from that conversation.
Well, Mr. Goenka, as we get into the end of any calendar year, the big question is what is the recovery in the United States? And you get some sound bites coming in from Costco as well as from Walmart. They are indicating that things are on the mend and demand is strong. The US market is very important for you. I think out of every 4 towels that are sold, 1 comes in from Welspun, and every 7 bedsheets that are sold, 1 comes in from Welspun. So you'll have a proper sense about demand out there. Are you seeing signs of demand recovery?
Well, US is very important market, as you said, very, very important for us. And is the largest market in the world for the home, for anything that matters. I think, and when we see the current demand, I think you can see around here, we are fully running 100% at 100% capacity. So the US market is looking good in times to come.
So it's good news then that the US demand is strong. Also, everyone's been talking about the China plus one. And Bangladesh as well has got into a lot of political instability of the recent past. How big an opportunity it is. We'll come back to the B2C business here in India, but as of now on the global stage, India has a big role to play.
So India is already playing a big role, particularly when we talk of home textiles.
Right.
I think we have already a major market share. When we talk about US, it's 50% market share. In US is from India.
Yeah.
Out of that, we are 25% market share. So China plus one story is definitely there. But when you talk about home textile, I think we have a much better and a stronger presence as a country, as a company.
For Welspun Living, how big can the B2C domestic part of the business become?
So as you know, Indian market, particularly when we talk about home market, is growing at a rate of more than 15%.
Yeah.
And post GST, when we see the whole consolidation happening, everybody's aligned, I think we are seeing a huge advantage for a company like us.
Yeah.
And I can say today, we are growing at a rate of more than 20% per annum in the domestic market. And we have a clear-cut target to become, like you said, every 4 towels sold is sold by Welspun. Same way, 25% of the market share in India. In next 3 years, we are trying to capture it.
So what would that mean in terms of a revenue number for the B2C part of the business?
So currently, we have around 600 crores of domestic market under the brand of Spaces as well as Welspun.
Yeah.
And I think that is growing at a rate of 20% CAGR. So in a 3 years' time, it will become double. And I think in the 5 years' time, it will become 6 times from here.
All right, 6 times from here. So it'll be more than a 3,000 crore business in 5 years from now. The other smaller part that is housed under Welspun Living itself is the flooring business. Now that's going at a run rate of around 800 to around 1,000 crores on an annual basis. How do you see that business shaping up? Because there is a big push as well for the flooring segment.
So it's a new product for the market. Initially, we had some struggling. I think it's settling down.
Okay.
And we are seeing a good potential in times to come. We are growing at a rate of 10 to 12% there.
Yeah.
As you said rightly, we are doing around 1,000 crores. But mostly it is coming out of the export. And domestic market, we are still at a very small overall small percentage of the whole revenue. But I think in time to come, that will grow.
Any numbers you want to give us?
Currently is only 15% domestically, 15 to 20%. That can go to 40% overall in time to come with the overall export and domestic mix.
And do you think at some point of time, since the flooring business has huge potential, will you look at carving out one of these businesses and maybe listing it separately?
It coming within the same textile part of it. At this stage, it's difficult to answer that question. But whatever is good for the, creating shareholder value, we'll take those calls.
Welspun Living at a capacity utilization level, what are you functioning at? And when is the next stage of capacity addition that you're going to announce?
So we are running around 85% plus right now. Overall home textile as a group.
Yeah.
And we already announced about the expansion of towels. We are adding the new range of towels for the beach, for the kitchen, the whole range.
Yeah.
Where we are going to invest around 400 crores in going to be commissioned by early next year. That will be adding another capacity by 15%.
Okay, all right. And also, another quick question is the promoter entity, they went and sold a small block in the recent past. I think the holding was little over 70%, it came down a little bit. Any further plans to divest some stake? And what was the reasoning that you have sold that?
I mean, primarily, as you know, we are holding 70% plus, and it is also part of the liquidity to create the right kind of liquidity in the market. And whatever the need for our own expansion plan in our different areas, I think that was a need. And we already said that next year or so, we are not going to further divest in our stake.
Well, do catch the full conversation with BK Goenka at 4:30 p.m. today, only on CNBC-TV18. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.